Hello, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Tuesday, December 10th, 2024. So last week, economic activity. Of the 7 indicators that were released last week that we're watching, 5 were actually positive. So again, we're out there, we're looking for data points suggesting the U.S. economy is slowing. There really hasn't been much. So we'll go through the 7 that we think are important, 2 that were slightly negative, but on the whole, pretty good. So last week, ISM Manufacturing Index expected to come in at 47.5, upside to that, 48.4. Job openings, the JOLTS report came out last Tuesday and way beat expectations. Expectations were a little under 7.5 million, came in at 7.75 roughly. Now, ISM services, that came in a little weaker than expected. Well, admittedly, significantly weaker. The expectations were it would come in at 55.5, came in at 52.1. Still positive, still above the 50% demarcation line. But nonetheless, that's something worth watching. Over the last decade, really, we've seen manufacturing slumping consistently under the 50 mark. Services has been consistently over and generally way over. So that's one we'll keep an eye on. Jobless claims last week, also slightly worse than expected, but the 3-month trend is actually looking fairly decent. So the expectation was 215,000 new claims. There were 224, slightly negative. Then Friday, we had a slew of numbers, most importantly, non-farm payrolls, average hourly earnings, and the Michigan consumer sentiment. All of those were positive. Non-farm payrolls for the month of November, expectations were 200,000 new jobs. Now, recall, October was a disaster. It was expected to be around 150,000 and came in roughly 15,000. So in this case, actually good upside. Expectations were 200,000. We had 227,000 new jobs. Average hourly earnings were expected to be up month over month by 0.3%, came in at positive 0.4. Lastly, Michigan Consumer Sentiment Index for the month of December expected to be 73.0. It came in a tick higher, 74. So in total, those looks pretty healthy, those data points. In terms of GDP expectations here in the fourth quarter, the Atlanta Federal Reserve didn't change their expectation, still at a positive 3.3%. Now recall, last quarter, third quarter, we came in at 2.8, might have been 2.9, one of the two numbers. But we're expected to have an uptick from that strong economic activity last quarter. Inflation expectations didn't move much last week, but they're at a very healthy level, I think. 2.24 is the expectation over the next 10 years using the 10-year break-even. Terms of Federal Reserve policy. So we have another Federal Reserve meeting next week. It starts on Tuesday, but the communication of a rate change or decision is on Wednesday. Expectations high. They're going to take one cut here, another 25 basis points. So the expectation is probability is built in 87%. Probability will get the 25 basis points, no more. Last week, that expectation was only 65%. So expectations building for one rate cut next month. So again, on the whole, we think pretty positive economic news last week. So let's take a look at how the markets responded. So in terms of U.S. equity, S&P 500 up about 1%. And one thing that changed this week, certainly year-to-date, Magnificent Seven, growth has done well. But really since the middle of the year, July 1st on, we had definitely seen a rotation back to small cap. We saw the Magnificent Seven slow down. Not last week, however. So last week, the market's definitely led by mega cap growth. In fact, the Vanguard Mega Cap Growth Index was up 3.7%, where the S&P was up less than 1%. So names like Apple, Nvidia, Microsoft, Tesla, Amazon, all rallying hard last week, largely based on upside guidance and results printed by Salesforce. So Salesforce is, in terms of their upside surprise, was actually based on their AI, artificial intelligence offering. So all the AI names got a huge lift last week. So I mentioned the S&P 500 up last week by 0.99%. In terms of the breakdown, value growth, huge growth week. Growth up 2.6%, value down 2.1%. Large cap beat small last week, up 1.6%, small cap down 1.2%. So clearly a large cap growth week last week. In terms of U.S. markets, international markets up a little more than the S&P 500. Again, S&P up about 1% last week. Developed markets ex-U.S. up 1.4%. Emerging markets up 2.4%. Lastly, we'll just talk about bond returns last week. Another positive week. So the Bloomberg U.S. Aggregate Bond Index, that was up 40 basis points, 45 actually. The 2-year, actually, the yield was down 5 basis points. So on a year-to-date basis now, Bloomberg U.S. Aggregate Bond Index, positive 3.4%. So let's take a look at this coming week and economic data that'll be released tomorrow, which is Wednesday. We start seeing some inflation numbers. We're going to have CPI, both core and headline number. We'll just talk about the month-over-month numbers. So the inflation rate, the headline number is expected to be for the month of November, same as it was in October, up 0.2% month over month. And then the CPI core, that is also supposed to be expected to be same as it was in October, and that's a positive 0.3% month over month. On Thursday, we'll get PPI Producer Price Index, and in terms of the month over month, this is actually expected to increase. It's 0.1%, but the month of October was up 0.2% month over month. Month of November, consensus, positive 0.3%. Core PPI, also released the same day. Core PPI month over month was 0.3% in October. That's actually expected to come down to 0.2% for the month of November. So that's it for the economic activity coming for this next week and a recap of last week and the markets last week. We thank you very much for your attendance. Thank you. Hope to see you next week. Thank you.